Good evening, everyone. Can anyone confirm if the audio is fine? Can everyone hear me? All right, thank you, Gia. Good evening, everyone. Welcome, my friends. Oh, good attendance today, huh? All right. So, we are going to discuss about order flow and market depth. Maybe you've heard this terminology, order flow, market depth. Can anyone tell us if you know something about this subject? Anyone? Order flow, yeah. Okay, idea. Yes, order flow. Okay, we will go on with the slides one by one and, try to discover these new things in trading. Because, I know it's either you admit it or not, okay? We all watch these things in YouTube University or TikTok University. We hear this order flow. They're talking about order flow and what are these things? So tonight we will do our best to get this as much as possible and, maybe add it to our edge in our trading journey, right? Okay. So again, we will have our 50% deposit bonus. Sorry. Let's go to our main content. Okay, understanding order flow in trading, the types of order flow, understanding market depth, and the liquidity, how liquidity drives the price. I guess I've said it in the past. Liquidity drives the prices to either direction, up or down. Yes, because there's where's the money is. As you see, I think I've explained this very well in our Malaysian SNR strategy. When there's some fresh levels up there, some fresh levels down there, this is where the price will go. And you've seen it, by your own eyes that yes, price tends to go to these areas because liquidity is there, the money is there. They're putting all their stop losses there. And practical application, okay, how to use this, the strategy, order flow trading strategy, and applying the candlestick psychology as well, and some conclusion in the end. Huh? So again, my friends, 50% deposit bonus. If you will deposit 100, you will get 150, 250 if you will deposit 500, and 500 if you will deposit 1,000. I hope you've already availed of this giveaway, my friends. If not, please do so. And also spread this to your friends, your family who are interested in trading. Perhaps they can benefit from this giveaway from Algotra. All right, my friends. So this may go fast, only 5 slots available, and take the advantage. All right. Now, order flow. Understanding order flow in trading. Okay, order flow is the flow of orders in the financial markets. So when you say order, just like anyone who will place the trade, they will put their buy order, their sell orders. These are the things I'm talking about. And for banks, large institutions, hedge funds, they will put these orders by the millions, huh? By the million, tens of millions, hundreds of millions. And this is what drives the market, driven by traders, investors, institutions, and other participants. Buying or selling of these orders impact market structure, momentum. That's why You will see it's in the sideways motion, and then suddenly there's a spike of price action going to the upside, to the downside, because these big boys have stepped in and placed their bulk of orders in that current price. Huh? And order flow is important to understand because it shows where big players in the market are making transactions and how it affects it affects the dynamics of the market as a whole. Examination of transactional information. Order block is a fundamental idea in order flow analysis. An order block is a region in the chart where large buy or sell orders from institutional traders have caused a shift in the momentum of the market. That's why when you see these big candles, just like 20, 50 pips, okay, high of a candle, or sometimes it can happen also, going down. There's a big red candle. This is where the large institutions have stepped in. Okay, these blocks show the areas that institutions are most likely to protect, huh? To protect their positions. That's why when there's the breakup structure, what I'm always telling you, there should be a pullback, right? Because there's a large gap there happening, some fair value gaps forming there, no, where the if it's in a uptrend, no, sellers were not able to participate in this price areas, and that's why price tends to go back there. But uh, the buyers in that example will protect this area. There will be an order block there, as I'm telling you, where we will enter. That's our point of interest. Sometimes it's FVG, either an order block or an FVG. We will go there, right? And then what? We will wait for our candle confirmation, our bullish engulfing, our favorite bullish engulfing, bearish engulfing. And then that's it. So there's usually a large reaction when price retraces into these order blocks, giving traders a chance to follow institutional moves. Okay, giving traders as retail traders, our small time traders, the chance to follow. This is where we will enter the market. All right, I hope you understand uh, what the order flow is. Okay, and on the next slide, you will see how. Okay, types of order flow: bullish order flow and the bearish order flow. So as you can see here, okay, price is making the higher high, and then there's a pullback there, and then a breakup structure, right? BOS. Once then, I told you that when there's a breakup structure, there's always be a pullback, okay? But price just doesn't go like in an equal length of pullback. Sometimes it's choppy. But this is where, okay, if they will enter here, okay, for those who are not aware of these order blocks, they are thinking, maybe this the order block, let's buy from here. Okay, and then they're buying, okay, and then they are thinking this is a breakup structure. But no, they'll put their stop losses there, and they will be the liquidity. They will become the liquidity in the couple of minutes. Okay, and then price will go eventually to that order block. This is where the order block formed, my friends, there. Okay, and the order flow, area is the order flow. All right, and then price goes to another pullback, hitting their stop loss, and now they are out the game. All right, then it will go back exactly to that order block, to that point of interest, and then making the another breakup structure to the upside. That's how it's all looking, my friends. Huh? On the bearish order flow, it looks exactly the same, but in an opposite direction. Okay, price method, make the breakup structure. Eventually, for those early sellers there, they will become the liquidity. And then price went to that order block, tapping in, and then going more to the downside, making all new breakup structures here. So that's how typically how it looks like, my friends. Okay. Order flow shows the actual buy and sell orders in the market. It reveals where traders are placing liquidity. Okay. So helps identify institutional activity versus retail activity. These are the retail and this is the institutional. Okay, the big boys are there. They are protecting. That's why price never went down went past this area here, this price point, because all the big orders are there. Okay, hitting that price and then, pushing it more to the upside and reverse naman sa downside. Okay, so order flow is essentially a representation of the constant struggle between sellers and buyers, in which institutions are vital players. All right. So you see, my friends, when you see this big green candle, okay, retail traders cannot do that. They need more money, more money, like millions, hundreds of millions, huh, to drive these prices up. And that's why us retail traders, okay, we all need to know where exactly, as much as possible, of course, as much as possible. You cannot say for sure 100% that, but with your months, years of trading, you will know why or where exactly should the order blocks be. Okay, as I told you before, there should be in an uptrend, there should be a red candle and a big bullish engulfing green candle on its right. That's where the order block usually forms, as we will see later on in the chart. Okay. Now, understanding market depth. Okay, market depth. This is really like advanced traders thing already, because personally, okay, I am not really into this, but we need to at least know what is this market depth all about, okay, because you will hear this from now and then, maybe in the future, but now we are in this webinar, we will know what is market depth. Okay, market depth is represented by the order book. What is this order book? Is this a book where we need to read, or what is this, which displays all the buy and sell orders for a particular security at different price levels? Okay, you will see this market in a while. Okay, the order book shows the number of shares or contracts, okay, available at each price level, okay, allowing traders to assess the supply and demand dynamics of the market. By examining the market depth, traders can evaluate the level of interest and participation from market participants, which can influence the execution of their trades. So now I want to know what is market depth. Okay, we will now see on this next slide. Understanding market depth. Okay, market depth displays available buy and sell orders at different price levels. So, who are these buyers? Also, the buyers. Maybe one time you will be a buyer on that particular time, and maybe you will be a seller on that particular time. It shows supply and demand zones. Okay, a deep market means higher liquidity, while shallow market means high volatility. Okay, so let's see this example. Let's make this bigger. Now, okay, in gold, okay, I made a screenshot of this last night. This is now the order book. Okay, in trading view, there's a way to see this. Okay, this is an indicator. Okay, I will show you later on what exactly is this. But in TradingView, there's a way, but you need to be on the live account, because it needs to be, I mean, you need to be connected to your broker. Okay. For me, for example, if I'm in TradingView, I'm using fusion markets, for example. I'm using fusion markets, as you can see here. Okay, fusion markets. So this data, okay, fusion market is printing these candles from their data. Okay, so I'm seeing an uptrend here, a downtrend there because of fusion markets. Okay, you can use anyone, Wanda, whatever. So let's, sorry, let's zoom in this, or okay, let's zoom in now. I hope you can see very well now. Huh? Okay, let's make this bigger. Okay, so what do you see here? You can see the sell and buy column here. Okay, there's a sell, there's a buy. Okay, at this time, it was in three. The price was 3563. Okay, 3563. So it's there. 3563 is there. It's going to be highlighted. You see, these are the depth of the seller, and this is the depth of the buyers. They will be there in the equilibrium at the current price when I made this screenshot. Okay, it was in 3560 point. What is this now? 46. So it's there. Okay, now it's 42 because it was moving. Okay, it cannot be exact, exact, but maybe because of the spread, I don't know why. But it's very close. Okay, it's 46 to 42 is very close. Now, what do you see here? There's 110 of sellers. Okay, there were 110 of what? What did I mention here? Okay, represented by which is all the buy and sell orders of a particularly secure particular security, like for example gold, at different price. Also, the order shows the number of shares or contracts. Okay, so these are the orders now. So at that time when I made this screenshot, okay, there were 110. Okay, sellers were in control of. That's why it made this bearish candle here. Okay, it made the red candle there. So at that time, if you want to enter, okay, you want to take much advantage because what are your confirmation? You are under the 200, you are under the 50. This is my 50 moving average, for example. So what is the logical thing to do? Buy or sell? So of course, sell. But now you have this order book. Now you see why there is 97 here in blue, 92 in red, 25 in blue. So that time the buyers, okay, or this chart here, okay, gave this data of 57. Is that 57 or let's say 57 shares? Huh? So that time at that price, 3563.37, the buyers were there. Okay, it's not showing because this will be it's dynamic, so this will change eventually. Okay, it will go up and down there, as you will see later in the live action. And once this is done, then that's the time you can decide you want to place your trade as a seller or a buyer at that time, because why you will buy at this point, because you are already below the 200, below the 50, and this order book is showing you that sellers are because anything higher than 100 is good. Okay, it's good indication that this is the sentiment is all about. It means sellers are more in control of this price action. So it's better to sell here at that time because you have more sellers than buyers, right? So that's the order. Okay. If I will explain all this to you, but I'm not an expert here, but just the like common knowledge about this thing here. So this is the depth of the market. You will see here, okay, anything here in the middle where they will meet, this is the equilibrium. This is where the current price was at that time. Okay. And you will see this is moving. And then you will see here this profile. Okay. When there's more like more full bars here, okay, compared to this one. So this is where the most bulk of the orders are being placed, okay, by either the sellers or the buyers. So at that time, when I made a screenshot, okay, it gave this very strong bar here with 110 as a sell. So means at that time it's very ideal to sell at this price, right? So that's the basic knowledge about this. So I hope that's clear, and we will show you how you will get this indicator if you want to use this on your advantage. Okay, let's just leave it there now. Think that will be fine. So, okay, liquidity, as you all know, when there's a stop hunt, okay, these are all equal highs, but it wicked here and then eventually went to the downside. So that's how liquidity drives the price, okay? Price moves where liquidity is. Available institutions seek liquidity pockets to fill large orders. So they place their orders there, made the stop hunt, and then push the price more going to the downside. Then liquidity voids create sharp moves and imbalances. So that's all about the liquidity. I hope you already know about this. We've already discussed this many times. And for the practical application, okay, spot stop hunts and liquidity grabs, just like this. Okay, I think I've already shown you how to know that there's a liquidity or stop hunt that happened on that price action. Anticipate reversals at liquidity pools. Okay, use depth of market to time entries and exits. So with that example, you are below the 200, you are below the 50, and this depth of market is giving you this data that more sellers are there at that price. Okay, they are bidding on that price to sell, not to buy. So that's why it gives you that data. So that's it, my friends. Okay, now combine with price action for precision. Just like that, just like that, just like this. Okay. This was an uptrend. Now it's made a change of character. Now it's really this action is now on the downside. It's on a bearish trend now. Why you will buy? Now it's finished. You see, it make the change of character there. Okay, now low, higher high, lower low, higher high, lower low. Now it's time to sell. Okay, what else? Now the strategy. Very easy. Identify liquidity zones, okay? Where there's highs, okay, the lows, or consolidation, okay? Equal highs and equal lows. Watch for aggressive buying or selling in order flow, okay? So if you will see this one here, okay, there's more sellers at that time, so sell. Why you will buy? Then enter trades after the liquidity grab. Okay, just like this, liquidity grab. Thank you very much. Now time to go to the Titanic and start selling there. Place stops beyond the liquidity pools. Where is your liquidity pool? If this is the liquidity pool, where's your stop loss? Where should be your stop loss, my friend? Okay, you already made a stop one, so you will put your stop loss there because now you will sell. Okay, so that's where you will place your stop loss also. And what else? Target imbalances. What are these imbalances? Anyone? I hope you already know what imbalance means. Can anyone tell me what imbalance means? Or imbalances? Very good idea. FVG, my friends. Yes, imbalance because you know those three I don't know how now I will show you this one, okay? For example, FVG. FVG, okay? There's the sorry. Three candle formation. Okay, and then here, a candle there. Okay, but the wicks are not touching, right? For example, this one. It's another wick. Okay, maybe this one have a longer wick there, but Maybe it could be anywhere, just like this. Where is the imbalance? This is this gap here from the first to the third. Okay, made a box. That's the imbalance. This gap, because the wicks of the third and the first are not touching. That's the FVG. Remember that, my friends? That's it. That's the FVG. That's the imbalance. So price tends to come back to this, tap this somewhere there, anywhere there, and then go to the upside again. That's it. Okay, I hope you already know about this. Okay, FVG, huh? Don't forget. Very important. Imbalance, imbalance. There was no sellers participating at that time. Buyers are just pushing the price up, and there is no battle. There is no battle. So there is imbalance. Okay. All right. Now, what else? That's it. Now, key takeaways. Order flow and market depth reveal true market activity. True market activity. Liquidity drives price movement, right? Liquidity. Do not be the liquidity. Always remember that. Institutions use liquidity pools to execute the trades. As you all know, when there's more liquidity, they want to go there. Combining order flow with price action increases accuracy. Okay, yes, break of structure. You all know this price break of structure, change of character. When all these things happen, there will be a pullback. Where is my point of interest? Where's my order block? Where's my FBG? I will wait here. Come on, let's go. Then when when the price comes to you, that's why, my friends, do not chase the trend. Okay, let the money come to you. As we always say, before you are always chasing the money. No, no, you cannot chase. Let it come to you. Just make your setup right, and the money will come to you, my friends. Believe me. Okay. Now, Algotur is a quantitatively driven trading company focusing on market making and multi-asset trading. Its expertise spans various asset classes, including futures, options, stocks, commodities, forex, and cryptocurrencies. Algotur is a quantitative trading service company with over 10 years of experience in strategy development, focusing on proprietary trading. Let the numbers talk. You can all read about this in our Algotur website. And also, please share this with your friends and family and read more about this amazing company. All right, my friends. And we also have our trading signals, copy trading, where you can capitalize just by copying our expert traders' trades. Okay, and you can start this with only $100. Okay, so if you want to avail of this, or you can always contact our Algoter managers, and they'll be gladly to happy to assist you. Also, share this information to your friends, your family, and benefit from this copy trading, okay, where they can always trade on the go using Zoe. All right. And we also have our insurance program where if you end at a net loss, Algoter will reimburse your qualifying losses. Keep 100% of any profits you make. Originally, this was $1,500 to subscribe, but now for only $500 minimum, you can begin and benefiting from this program where there's a sweet spot of $6,000 with a return of investment of 26.79%. Very nice. And you will get other perks where there's 2 to 5 signals daily. What else? Up to 1,000 in daily loss coverage insurance and much, much more. So if you want to avail, please always contact our Algoter managers and they'll be gladly to assist you. Okay. And yes, as you all know, Zoe is a global financial technology company under the Zoe Group, headquartered in the United Kingdom with operational centers in Hong Kong and the United States. Specializing in safety trading, Zoe offers a diverse range of financial products, including forex, precious metals, oil, indices, and U.S. shares. Zoe is fully regulated, offering a secure and professional trading experience with competitive fees, fast execution, and powerful tools to grow your investments confidently. So it's available in Google Play and App Store, where you can install this in your mobile devices, including tablets, and trade on the go wherever you are and capitalize. Okay, my friends. And lastly, our 50% deposit bonus avail, my friends. Okay, you cannot get this in any other broker where you will get, for example, 100, you will get 50, 500, you will get 250, 1,000, you will get $500 extra. Where you will get this $500 extra? No one will give you $500, my man, except for Algotur. So please, my friends, contact Algotur managers and they will assist you anytime you want. Okay, I hope that's it. We reached the end of the slide. And now we will go to the chart and see it in action. Let me just drink some water because it's getting thirsty, huh? Okay. So now, where is that indicator? You want to see it? I'll show you. It's here. It's called depth of market. Okay, DOM, not the other DOM, huh? Don't think of the other DOM, my friends, huh? Sessions auto ticks. Okay, well, I don't know. It's by Lux Algo. You will just go there. Okay, it's there. Depth of market, Lux by Lux Algo. Okay, you click that, and then it will look like this. There, nothing to do anymore. It's in default. If you want to change the settings, it's up to you. You want to change the colors, okay? For example, green, okay? Okay, you can always check this eye here for information. Enable, disable depth, showing cumulative supply above the current price and the cumulative demand below. Impact on price. You can always do this, but for me, I'm just leaving it as it is. Okay, I'm not doing anything. It's just in default. No need to do. Okay, so it's there. You see, it's dynamic. Okay, and then it will print out all these orders as it goes along the way. So these are the buy orders here and the sell orders here. So if you can see, I don't know, I cannot enlarge this. I can maybe, yeah, no. Well, yes, I think that's the maximum we can go, but just look closely in your screen and you will see here, okay, there's 92. So there's more buyers at that price, huh? That time. But now this is the equilibrium. This is not the current price market. So if you can see, there's more sellers than the buyers. What is this? 84 versus 96. All right, that's it. So if you are on that time, you want to place a trade, now it's 110, so much better now to sell. And you will see now that in the Euro USD, okay, this is Euro USD chart. You can see here. Okay, there it is. So see, it's printing the red candles because there's more sellers are in this price leg. So more sellers here. So now see more 128 now. So time to sell. Why are you going to buy? Okay, put on your EMA 200. You see, it's below now the EMA 200. 50 or 20. You see, it's better to sell now. You see, printing at this price. You see, what is this price? 1.6. You see, it's dynamic. It's going to change now. This is now buyers are having more orders here. They want to buy. I don't know why some crazy people are going to buy at this point, but that's the idea, my friends. Okay, so the higher the value, then the better. So what is this? 40 versus 38. No more sellers are there, no stepping in again. So this candle is now growing as it goes along the way in the 1 hour time frame. Huh? That's it. That's it. Very nice. Okay, so let's see how to trade this strategy. Okay. So for example, I don't know, just go to some random some random price here in the past, to get the idea. I don't know, where is that? Let's see. I don't know. It could be anywhere, my friends. Could be anywhere. I don't know. It's too far now. Is it too far now? Yeah, let's check. Hmm. Okay, for example, this one. For example, this one, typical price action. Okay, so let's hide this. It's getting in the way. Now, unfortunately, we are in a replay, so we cannot see the depth of market because we are in a replay. So just that's why I given you the idea how to use that depth of market where you can get that data at that time. So let's see the price action here in Euro USD. So it's in a downtrend. It's clear in a downtrend. So this is in the 1 hour. This is very will give you a lot of profit here if you know how to trade. Because you see, if there's a lot of liquidity here, this is now the liquidity, fresh. Malaysian SNR fresh. All these are fresh levels, my friend. No? Not touched, not unmitigated. So this is now the best way to trade this. Okay, so once you all have this, okay, this is all fresh levels, and you will see later on why this is the best way to go. Okay, so these are all fresh. These are the liquidity. All the stop losses are there. Stop loss here. Stop loss here. Price wants to go there. Okay, let's see what will happen. Okay. Okay. So it's like going in a sideways action there. Okay. See, forming equal highs, equal lows. There, you see, all the why price cannot go in this price leg. Why? Why it cannot go there? See, equal lows. Okay. So that's the telltale sign. This is in 1 hour. Okay. You can always watch this for like for how many hours. And you will just notice, oh, it's not going down. So these are equals. This is liquidity. Okay. So more. Okay. Now you're noticing it's not going in that price there. It's just going sideways there. We need that. What do we need? The liquidity hunt, the stop hunt. Okay, it went down below this price here, okay? But you should also include this, okay? This is also included, so it's there. So it closed above that low here, that low. This is you see if you will zoom in really, you can see. Okay, there. Why it closed there above that low, that wick here? It didn't close below. So this is still valid. Okay, we need more. If this is a stop hunt, then very good. But what are the other sign? Now, what we need to break what? This high. We need that change of character here. This is the last high before this low, after this low. So it should break this high to have that change of character, the chalk. Okay, moving on now. Let's see. There. You see, my friend, it even went lower than this week here. Okay. It made sure it stopped everyone in its track. There, that's the stop hunt. Okay. And what is this? In the 1 hour time frame, this big green candle is signifying what? A very strong bullish sentiment, right? So if we will go back to that, okay, spot stop hunts, which we already did. There, it's there's the stop hunt. Okay, then what? Anticipate reversals at liquidity pools. Liquidity pools, liquidity, all the liquidity is there, my friend. This is liquidity there. All the stop loss are there. There. What else? Use depth of market to time entries or exits. As I showed you already, okay, when you see more sellers or more buyers, that is the time to place that's give you more confidence. So this is very big, see, very big green candle. Wow. If we are done the time trading the Euro USD and seeing this in 1 hour, this big green candle here in the 1 hour, my God. So it signifies more bullish sentiment. So, and if liquidity zones, high and low. So in this example, we are in the low. Okay. Watch for aggressive buying or selling. What is this, my friend? Is this not aggressive for you? Is this not aggressive enough for you to buy? Okay, we now have that. Enter trades after liquidity grab. Is this not a liquidity grab? Stopping everyone here in their tracks. Then what? It went to the opposite direction, started to see if you are if okay, if you were a seller and here and that time, you will put your stop loss there. You will put your stop loss there, right? Now you are out the game. Bye bye. Thank you very much. Another stop loss here, more here. They are now in the next target here. Okay. And okay, place stops beyond liquidity pools. Okay. So if you are going to buy, okay, but you see, we still did not see it. Okay. After this break of structure, sorry, change of character. Okay. There's the chalk there. So we expect some pullback, right? We will expect some pullback. Target imbalances. What are the imbalances we are talking about? FBGs, right? Or next liquidity zone. Okay, let's do that now. So once you have that, you expect a pullback, right? So where is the pullback? Let's check out more price action. Okay, you see, that's the pullback. Okay, we need the what? What do we need after this pullback? What are we looking for, my friends? Tell me now. We discussed this many times already in any other strategy. Smart money, I don't know, London breakout, anything. Okay, there's always a pullback. What is the pullback? Because we want to see the what, where are we going? Anyone? Anyone can answer me? If there's going to be a pullback, it's going because of the what? You forgot what is the idea behind this pullback? No, my friend. You see, when there's a pullback, because we are going to the point of interest. Those, yes, maybe imbalance, yes, because you want to look for that FVG, which is an imbalance, yes. Yes, correct, Hygia. But to sum it all, it's called a point of interest. Okay, so let's see if is there an FVG now? No, there is no FVG this week. Okay, is overlapping already with this scandal, and this week is not valid. So let's see if there's any point of interest we can see here. Okay, bullish engulfing. You see that red candle, and then there's a green engulfing candle in this uptrend. So if there's no FBG forming here, this is now your point of interest. This is now your order block. This should be now your order block, okay? Because it's now giving this green bullish engulfing candle here to the upside. It means the sellers are there, okay? The big institutions are step in, okay, stopping this red candle to go even lower. So this red candle, okay, highlight the week from week to week. This should be now your point of interest. This one. Instead of the FBG, it made this order block. Now price should go back here before we will enter. That's it, my friend. After the change of character, there's going to be a pullback. Either it's an FBG, okay, or an order block. Let's see. Okay, going there. But strategy is a strategy. We have to, okay, do it by the book. Going sideways, you see, indecision. Neither the buyers or the sellers are winning here because anytime now, it should tap this order block. Okay, it started there. And there. Then enter from there. But what? We need the what? After this, it tapped our point of interest. What do we need now? The confirmation candles, the bullish engulfing, okay, or anything, a hammer. We already discussed this in the past webinar. Let's look for that bullish engulfing. Okay, it taps in. Don't worry, we're still not in the trade. Okay, that's not a bullish engulfing. Okay, that could be a hammer. Huh? It looks like a hammer, right? You can enter from there if you want. Long position, just below this wick here. But if you can manage all just below this order block, it's better like that. Okay. Now, where is our target? This high. This is nothing, my friend. You are dealing with the 1 hour, right? So what is the best thing to do? Look to your left. All this, right before we even started this one, I told you we are in a downtrend. All this is fresh levels here. All this imbalance. You see, you zoom in now. Where is your imbalance? This is all a lot of FBG here. This FBG, right? These are the imbalance, my friend. This, anything you see here, this FBG, all the stop loss, all the imbalance are there, all mixed together now. The more confluence that price will go to this and kill everyone now. Okay, so where is the best, the last imbalance you can find here? The highest. No, this is not Is this an FBG? Maybe, but it's very small, huh? What else? This. We will target this. Price will go there. Okay, 1 point. In essence, huh? Okay, in theory, yes. But what else? This could also be a target here. You see, there's an imbalance here. Yes, this, right? There's an FVG there. You can target this. Anything can happen now. Either this or this. It depends on your prerogative. What you want to do with your take profit. So let's try this first because this is the first with the substantial gap there. So what is this price? 1.169. Okay. Here. Okay. For example, let's say you see anything I told you, okay, you cannot know for sure because no, in trading is just all probability. Either it will try to hit this last week here before that FVG, or it could tap inside the FVG by the week only, okay? So just I don't know, just there, okay? Just to tap this imbalance here, okay? Because this is in a 1 hour, okay? This is in 1 hour. The profits here is just incredible. Huh? If you have the best, if you have a nice position size here, like $10 per pip. Wow! Imagine, huh? It will be in the thousands here, just like that. Okay, you already hit the highs here. Okay, surpasses this. You surpass this high, this imbalance here. Okay, and a lot of stop loss here. All this is fresh levels in the Malaysian SNR. This it didn't. No candles cross this. This is very ideal. All the stop loss here. They have the FBG. Oh my God, my friend. This is also an FBG here. Imbalance. It should tap this. Price wants to go there, huh? So I've already showed you what is the probability here. I don't know. It could go there anywhere. It's just showing you all this. Okay. This. Okay. Maybe you can, this will be your TP1, TP2. It all depends on you. Okay. But let's see. Okay. If you are winning, okay, you can close this to break even. And now you will not lose anything if everything plays well. But now we'll show you. Oh my God. You will enter there, for example, stop loss just beyond that order block, targeting this. Okay, let's see if our trade idea will go well now. Okay, playing now. Will it hit our take profit? Let's see, my friends. There, you see? Easily. As I told you, price wants to go to these fresh levels here with that fair value gaps all in the way here. All the stop loss are now getting triggered. They're losing all their money back. So, how nice, my friends, huh? How nice trading this trade idea. And if you will see that market depth of market indicator there, as I showed you, this one by Lux Algo, okay, depth of market, DOM, you can always see that this is the best time for sure. At that time, you will see here that this is the best time to buy. Okay, it will be in green. There's a big green candle there. You see, we even entered early. Okay, but there's a big bullish engulfing there, and you can enter here from the trade. And now it's better. We saw the hammer. We are inside the order block. Okay, but maybe you didn't spot that hammer there. You can enter here after that bullish engulfing. You can enter there. Still, you will win this trade. Okay, stop loss just below this wicks here, this swing lows there, and it will never hit your stop loss and going to your take loss. So I'm showing you all the possibility. You can enter from the hammer or after this bullish engulfing. And my friends, just always check the profit going on your way. How nice, my friends. Is there any question? I hope I've already explained to you this this strategy in detail, and you can always watch this on Algotor's YouTube channel again and again to master this trading strategy. All right, my friends, I hope you already discussed this well tonight, and thank you all for coming for tonight's webinar. I cannot mention everyone in each and every one of you, but thank you. And I hope you've learned some secret sauce again tonight. And who knows, maybe I'll think of something by next week. I'm running out of I'm running out of secret sauce, my friends. Maybe the manong sauce will now come anytime soon because I've finished all these killer strategies for you, and I hope you will make it useful in your trading journey. All right, my friends. Thank you once again. Good night. See you next week. Bye bye.